Alan, to what degree are we in that squishy place where people are trying to figure out what this Fed language means? Are hikes done? Are they not? Does this put more of a magnifying glass on Friday's numbers for jobs and wages if the Fed's looking to the data for permission to pause?
Yes, I'd say it's getting about as squishy as it ever gets right now. I mean, Jay Powell more or less said that. They're, groping for the top. They think they're right either at the top or very close to the top. The other thing I put on your list, although it's 3 weeks off, is the minutes. I'll be looking at that to get some further information on how many members of the FOMC thought this was enough. Nobody dissented. We know that. But in the last minutes, we saw that several members thought what they had done at that point was already enough. And I don't know what was said at this one.
Jason, was it enough?
Look, I think they did exactly the right thing by raising rates today. I think Jay Powell doesn't know where rates are going to be later on, so he shouldn't pretend that he does. Getting rid of forward guidance, moving to pure data dependence, I think that's the right move, too. If you ask me my forecast, I think inflation is really embedded. I think it's not coming down very easily. And so I think they're going to be a little bit unpleasantly surprised about where inflation is, and they're going to need to raise rates. Maybe they take a meeting off, go back to it the meeting after that. Maybe they raise it the next one. But, that's really my forecast of the economy, not my forecast of the FOMC.
Jason, I know you are watching this credit crunch process. NerdWallet was down 22% today. And I actually asked CEO Tim Chen how much of their weak guide is because banks aren't as eager to lend money. Listen.
Absolutely. I think we're seeing that on the margins. And I also think that you're seeing anticipation from even the large banks that are less affected, that regional banks are going to slow down lending, and that might slow down the economy as well. So I think the rate hikes are having their intended effect. For us, we really just want to be here to help people navigate through that no matter what happens.
Jason, how much of that do you see? Where are you looking to really get a sense of how much of a effective rate hike the credit tightening is giving?
Yeah, look, and Jay Powell got that question in the press conference, and he wasn't able to answer it either, so I'm certainly not going to be able to. I divide it into two types of things. There's market-based financial conditions. Those have actually eased. Mortgage rates down, dollar weaker, corporate bonds yields lower, and they're issuing a lot of those bonds. So that's actually all an easing in the last month and a half. But then there's all the non-market stuff. That's probably more important. That definitely is all tightening. We have these subjective surveys, NFIB we already got, the senior loan officer survey we're going to be getting. You can look at some of the bank flows and what's happening to loans, especially in the multifamily sector. So on balance, the market easier, the non-market stuff tighter. It's probably a tightening. That's why I don't think they'll need to go to the 6% rate I had previously expected. I'm still not sure it's going to be enough to do the job they want, though.
Yeah, Alan, I mean, the other piece of this puzzle, and Powell said the banks are sound and resilient. He even used the word resolved, saying that the three large banks that were at the heart of the early March stress are now all, quote unquote, resolved. But do we yet know how sound, how stable the financial system actually is here, with rates now at the highest that they've been since 2007, and of course the wild swings and sell-offs we've been seeing in those regional bank stocks in recent days?
I think broadly the financial system is very sound and very stable, but the key word in there is broadly. That doesn't mean there isn't fraying around the edges. Who predicted Silicon Valley Bank? Who predicted Signature Bank? Who predicted First Republic? By the way, I didn't, so don't think I'm claiming credit for knowing things that other people didn't know. Why are we to believe that that's it? Only those three. And we know it has been a generic problem, that banks have been inappropriately or ineffectively prepared for these Fed hikes, for the extent that they would go and how high they would go. So I think there's still lingering worry about that. Like Jason, I can't give you a number of how much this is going to do for economic growth or even for bank lending, but it's not good. and I think it's a real hazard.
Okay.
And the one thing I like to add, by the way, is Powell didn't mention at all, basically, except to slough it off, the national debt ceiling. That's another storm. If you talk about financial instability, if you want to get financial instability, that's the way to do it.